This is my short strategy on strategy. My short strategy on strategy. My short, better said, my short thesis on strategy. I base my trading on two things, on cycles and patterns, and that's it. No fundamental analysis. I don't get it. My brain doesn't understand it. I am too much of a pendejo to understand it. But cycles and patterns, I have a decent handle on. There's a winter, there's a spring, there's a summer, a fall. The sun rises and it sets. Cycles and patterns, and that's all I do. Now, when I come up with a trading idea or a thesis, when I come up with an idea, I have these conversations with myself because I have nobody else to bounce these ideas with. So they're a buddy of mine who's in my head. He's my pretend friend, my make-believe friend. Pretend. There's a word for it, pretending. The fucking guy, the point is, the guy is in my head and I talk to him and he reviews my work. I tell him, hey, I have this idea. What do you think? And he tells me, okay, what do you got? I show it to him. He reviews it. And that's really it. So this is my short strategy on strategy. So what do you got? Okay. I'm looking, self or my buddy is looking at a accumulation, the run up, peak, distribution, sell off. So at this point, you're telling me that you're short strategy stock and you're going to get closed out at 140 bucks. Okay. Should price hit 140, you're out. All right. This is a 5-minute chart and you're showing me a range from the middle of December to the end of the month, and it's hit the top of the range, bottom of the range, and just chop. At this point, at the end of the month, it breaks momentum or price structure, making lower lows and lower highs all the way down until you hit, I believe it was end of day on Thursday, this past Thursday. Here's a zoomed up chart. Zoomed up chart. It's showing making lower lows and lower highs, bottoming at the end of the day on Thursday. I believe it was the 5th. The last 5 minutes of that day, the stock ran up. It ends up gapping up on Friday morning, passing this price level that you've highlighted here pretty quickly into the day and commences to make higher highs and higher lows. Here's a price point of 139, 140 bucks, where you cut your short, and you've highlighted this price range where that short, should it go above that, then you're out. I believe this is the ROC that doesn't tell me shit, and the MACD, which is showing me a divergence. As price goes down on Thursday, the momentum on the MACD has bottomed and is heading up. It continues to head up on the opening and early Friday, where it starts rolling over and heads down until the end of the day, and it looks like it's starting to head up. So this might end up getting closed out in the next couple of days. You're showing a chart of longer time frames, the weekly, the 2 weeks, and the monthly time frames, and the MACDs. Up here on the weekly, the MACD is below the zero line. It's starting to bottom out, maybe curl up. Momentum wise, the 2 weeks, it looks like it has room to go down, even though it's below the zero line. It looks like it has room to go down, like it's still going down, in other words. And the monthly time frame, still above the zero line, and it looks like it could continue to head down, which might give you a couple of months, maybe till the end of the year, before this thing starts maybe bottoming out. Doesn't necessarily have to go below the zero line, but still maybe have some room for that price to drop. You're showing the cycles, two cycles, the previous cycle and the current cycle. The previous cycle from peak to trough lasted a little over 700 days. Should you put that same timeline, this cycle would end roughly the fourth quarter of 2026, a little over 700 days. Here in green is the 50-day moving average, and you could see that the price has respected that 50-day moving average. It's bounced off of it twice and keeps on heading down. The 200-day moving average here in orange is highlighted. There's a change of structure after this consolidation. Price breaks above the 200-day moving average to continue with making higher highs and higher lows. Another thing I noticed is that the 200-day moving average is has really curled over and been heading down for a while. And on the daily time frame, this hasn't done that. So that'll give you some time for this price to be down here somewhere. Here's a fib level of the previous cycle from bottom to top. Price, or this cycle ended right below the 0.786. You take a similar fib level from bottom, assuming this is the peak. 0.786 is right around the $30 range, this highlighted red rectangle. You're showing a highlighted peak, the last peak before the last bottom, and then the top, the last peak before the last bottom to the top. Price ended the first cycle right below this peak here. If price ends on the second cycle of this current cycle below this highlighted peak here, you're looking at about the $30 range down here somewhere. Here's the composite man at work. What this guy does is he accumulates, price runs up, he runs up the price, and then I buy it here where he distributes it. And I hold on to it as the price goes down. And by this point, I'm a broke dick. And I end up selling it back to him where he's happy to buy it on the cheap and then runs up the price up until it peaks. He starts distributing it back to probably me, and then it shits the bed again. So here you're showing that there has not been accumulation after this rollover, which, if the cycles repeat, possibly would happen at the end of the year. So 1, 2, 3 down, 1, 2, 3 down. This still needs to accumulate down here somewhere. Here is the anchored volume profile from the beginning of this cycle, and it's showing 3 ranges that I've noticed. Top, the one up here, this top one, this middle one with heavy volume, and the heaviest volume is down here, and that just happens to coincide with the $30 price range that could end up coming down to, which makes sense. This chart, I guess this shows your invalidation where your thesis doesn't make any sense. This is the anchored VWAP from the beginning of this cycle, and it's hovering currently around $200. That'll change as time goes on. Either way, you're cutting your short gets stopped out at 140, but you're invalidated as soon as these price ranges price starts moving above these price ranges. So if you start seeing price make higher highs and higher lows, then your thesis is wrong at that point. And at this $200, I am thinking you're probably going to start looking for longs. So, a ver qué pinche pedo, bro. Let's see what happens. Best of luck. Yeah, a ver qué pedo, güey.